Hello, everyone. Good morning from this part of the world here. And depending on whichever time zone you are tuning in from, good afternoon and good evening to you. Welcome to the final edition for the Forex Morning Mastery for this week, the last trading day of the week. And of course, I'm very excited to be here with you. This week has been splendid across all the assets we have been monitoring since the beginning of the week. Remember, on our watch list, we have been looking at the USOILSPOT, which we of course have been looking out for buying opportunities since the beginning of the week as a result of the fact that price still remains above that ascending trend line we identified at the beginning of the week. And of course, the USDJPY did splendidly well for us all on and the last, especially during the first half of the week, we were able to scoop in some significant amounts of profit. And on the XAUUSD too as well, we've done pretty well, I would say, on that particular one too. So today we are going to be looking at these charts together. We are going to see what has really been going on from a technical and fundamental perspective. Sorry about that. So we are going to be looking at things from both technical and fundamental perspective with the utmost intent of strategically positioning ourselves for the next move. Today being the last trading day of the week, it usually comes with its own peculiarity, which is most of the time psychological. Due to the fact that today is the last trading day, we do expect that market participants will want to be rounding off their trading activities ahead of the weekend. And as a result of this, there is a high tendency of price action moving in the opposite direction of the prior leading price action as a result of profit-taking activities ahead of the weekend. We are also going to be taking all of this into account while we review the current market conditions. And in fact, I do have insightful and simple trading setup that we can bank on ahead of today's session. So I encourage us all to stay tuned in so that you do not miss out on any of the ideas we will be deliberating on today. And for those of you joining us for the first time, you're highly welcome on board. Very excited to have you join me. We run the Forex Morning Mastery 3 times in a week. That is Mondays, Wednesdays, and Fridays, where we come together to have a deep understanding of the character of market participants in the respective environment of the asset we monitor. It's more or less an educational platform where we come together to help ourselves to grow in the Forex market. And I encourage us all to engage in the comment section. If you have any questions, feel free to let me know in the comment section. I see you, Jonah Aruna. Good morning to you. Glad to have you around with me. Trust you're doing very well. And how was your week so far? How was your trades? Which trades did you take? How many of them did you take? Let us know in the comment section how well they have done. And if there are any challenges, feel free to let me know. I'm willing and be very glad to be of help in that regard. So with that being said, we will be diving right into the business. And as always, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And in fact, before we go into today's expectations, we are also going to be reviewing what has really happened during the course of the week. Obviously, they have been influencing how market participants are behaving. And the reason why we check on the economic calendar, let me quickly state that for especially for those of us who are joining for the first time, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart. helping us to identify potential trading opportunity, and most importantly, timing in such a way that we can capitalize on that move prior, during, and even after this economic event. Now, based on the asset we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the Japanese economic docket. We usually focus on high impactful event, but days when there are no high impactful event, we include the mid-tier to have a broader view into the market expectations for that particular day. And for this week, the first half of the week has been absent of any high impactful event. So looking at the mid-tier, we had a bunch of speeches from Fed officials Monday through Tuesday, Wednesday, and Thursday. And of course, in the last couple of days, we also had some important events like the speeches from the Bank of Japan's governor, Ueda, that was on Wednesday. And in fact, from the little highlight I was able to capture from that event, it's the concerns over excessive volatility in the yen has been emphasized, really, especially from the Bank of Japan's governor. We also saw the vice finance minister and the minister of the Japanese economy also mentioned this, indicating that Japan's government may step in to stabilize the currency if needed. And this obviously had limited further downside for the Japanese yen. Now, we will be looking at the details on that one when we go into the USDJPY. Then on Thursday, we had a very important result from the labor sector, which resulted in some high volatility during yesterday's trading session. For those of us who were trading the XAUUSD, most importantly, during the I think about an hour, 30 minutes into the New York session, the initial jobless claim was published, and the data in fact came in surprisingly higher than what market had expected. Lower than what market had expected, and even lower than the previous month. Now, for those of us who do not know what the initial jobless claim is, this is a data that measures the number of people filing first-time claims for state employment insurances. Now, if the data comes in higher than market had expected, it usually indicates weakness in the labor sector, which obviously could influence the US dollar negatively. And if the data comes in lower than market had expected or lower than the previous month, it shows that there is a positive traction in the labor sector, giving the US dollar some opportunity to thrive. And this in fact resulted in a crash in the XAUUSD yesterday. I think I saw about 80 pips to the downside, taking me out of all the buy positions we had yesterday before the gold began to gain some traction again. In fact, we are at a crucial juncture in the gold market, which I will be deliberating on further, so you don't want to miss out on that one. Then we also saw the S&P Global publication from the United States yesterday. We saw the composite, the manufacturing and service PMI. Now, for those of us who do not know, the S&P Global is a data released by S&P Global, of course, and it shows, gives market an insight into how the manufacturing and the services sector of the United States is performing. And usually it's an index between 0 to 100, where anything above 50 is considered as an expansion in that sector, and if it's below 50, it's considered as a contraction. Now, from the results we saw here yesterday, it was in fact splendid, let me say, as all the data came in higher than the previous month, and in fact higher than what market had expected. Though the manufacturing sector is still below 50, which has been consistent in the last 3 to 4 months now. However, it shows that there is a little bit of expansion in that sector. As you will see here, the actual data came in at 47.8, a little bit higher than market had expected and the previous month data. Well, the service sector as always has continued to expand. We saw a 55.3, a very good figure showing how resilient that service sector is in the United States. Now, how did the market react to this event? Well, we saw a very positive traction in favor of the US dollar yesterday, and I think that traction did not last long as we saw price resume a retracement move in the US dollar, and this obviously also affected the US Treasury bond yield, which is edging lower as at this morning. So we are going to be looking at that one too as well and see how we will be navigating the market around our US dollar assets. Then yesterday we also saw the CPI data from the Japanese economic docket. For those of you who do not know, the CPI is an inflationary data which measures the average changes in prices of goods and services in the last 30 days in the Japanese economy, indicating the inflation levels in that economy. And of course, we saw what happened here. We saw a 1.8%, showing signs that inflation is thinning out in the Japanese economy. The previous year on year was 2.1, and the excluding food and energy was a little bit higher than the previous month, and the excluding fresh food was lower than the previous month. So for me, the inflation is still considerably okay, at least they are below their official target, which is at 2%. And at the moment, the yen is not really doing very well, especially against the US dollar. And of course, there's been speculations around the Bank of Japan intervening at any point in time, which could give some positive traction for the yen. But till then, the market is still very, very uncertain. We are going to be looking at those structures to see how we will be navigating those markets today. So you want to stay tuned on that one if you are a USDJPY fan. Now, for today, Friday, October 25, we are looking at actually, there are no high impactful events today, but there are some important events, especially from the United States, which we obviously want to be taking into consideration as they will be giving the market some short-term trading opportunities as they round off their trading activities ahead of the weekend. Now, one of them is the durable goods order, and this data here is usually released by the U.S. Census Bureau, and it measures the cost of orders received by manufacturers for durable goods, which means goods that plan to last for 3 years or more. So we are talking about motor vehicles, electrical appliances, and the like. So if this data comes in higher than market had expected, generally speaking, it's supposed to bring in some positive traction in favor of the US dollar. And in fact, if it comes in lower, then we could see the US dollar nosedive theoretically. Now, we have a bunch of the durable goods order. We have the conventional durable goods order, which is the top one here. We have the one that excludes defense gadgets, that is artillery, military artilleries and the likes. And we have the one that also exclude transportations, and the one that exclude aircraft and the like. So this is one event we want to see. It's coming up exactly at 12:30 p.m. UTC. So you do want to be marking out your timing to be around to see how the market is anticipating that event. Then we also have the publication from the University of Michigan, that is the Consumer Sentiment Index, a data that gives market an insight into how pessimistic or optimistic consumers are of the US economy. Now, this data here shows the tenacity surrounding spending in the last month. So if the citizens in the United States are buying or paying for goods and services, it shows that the economy is buoyant and is resilient. So the previous month came in at 68.9, as you will see, and market participants and economists are suggesting that the data will come in a little bit higher than the previous month, just about 0.1 higher than the previous month, pegged at 69. So we look forward to see what the actual data will be. Will it be just as market had expected, or will it be lower than the expectation or even higher than the expectation? And of course, depending on what comes out of this will determine if the US dollar will rally again today or decline. So this one is coming in 2 p.m. UTC today. I think about 2 hours into the New York session that is going to be coming in. So for me, these are the major events that I want to be looking out for today, though they are mid-tier economic features, but I still have a strong feeling that market participant will be looking forward to them to decide short-term trading opportunities for today. And of course, I usually mention this multiple times that major key players in the market do have insiders in these departments that will be releasing this report, and of course they usually have first-hand knowledge even before the report comes out. So as a result of this knowledge, they usually position themselves for the release of this event, and this positioning usually gives trails in the market, and which we as retail traders look out for on the charts as price action. So talking about price action, let's dive right into the business. I see you, Wokocha Kingdom. Good morning to you. Glad to have you around with us. So the first asset we are going to be looking at this morning, of course, is going to be the USOILSPOT. And so far this week, we've done pretty well on this particular asset. Remember, we have been buying this since the beginning of the week. Let me quickly say here again, I will not be going into the higher time frame. We already done a top-down analysis on this asset on Monday. So if you in any way had missed out on that top-down analysis, I guess you would like to, for educational purposes, you will like to watch my Monday Forex Morning Mastery session on Monday for that overview. So our key level for this week was situated along the $69 area. And of course, you know how we use our key level. We definitely want to be buying as long as price remains above that key level. Then secondly, we also had this ascending trend line marked out on the 4 hours time frame, and price action showing buy pressure above this ascending trend line at the beginning of the week. This was where the week began for us, around this area. So the emergence of buy pressure around that area, coinciding with the fact that price remains above the key level, was a sweet spot for us to join an uptrend move. And since that moment, we have been buying the USOILSPOT, added more positions at the breakout of the $69.70 level. Remember, we also joined on the second trading day of the week. We also added some more here on Wednesday, following after our live session on Wednesday, before that strong bearish traction came in yesterday New York session. And in fact, I did bought here at the $71.30 level. For those of you who saw my updates yesterday morning, I was looking at buying around that area, but unfortunately that did not do very well as we saw price take us out of that position in a loss. But if we take into account all that we have scooped in this week, of course, we are on the positive side of our portfolio. Now, going into today's session, what are the chances that buyers have, and are there any possibility that sellers could come in, probably take out that ascending trend line we identified here at the beginning of the week? Remember, I did say here that I will not be considering selling unless this ascending trend line is breached and broken to the downside, which is yet to happen, and which still gives me hopes that buyers could still push price to the upside. And if we look at things from a fundamental perspective, well, there are a couple of, in fact, there are a bunch of fundamental factors behind the scenes that has been influencing the sentiment in the market. In fact, the current market driver left crude oil at a pivotal juncture with both geopolitical risk and U.S. inventory data influencing the near-term price outlook for the U.S. crude oil commodity. Well, to top the list is the geopolitical tensions in the Middle East. We've talked about this week in, week out, as the heightened tensions, particularly concerning Israel's possible response to Iran's recent missile strike, raise fears of potential disruption to Iran's oil infrastructure, which has a potential of supporting oil prices. And I still think that the market is still banking on this possibility to buy the U.S. crude oil. Then another factor we could also talk about is the Israeli Gaza Hamas Hezbollah situation, though there has been some resumption of U.S. and Israeli discussion around a ceasefire and hostages in Gaza, which has contributed a little bit of cautious trading in this market, because market do not know what the outcome of this discussion is going to be. Will it result in a ceasefire, especially after Hamas leader was assassinated, or could this still escalate further? So there's still a bit of skepticism in the market at the moment. So we need to be very, very careful while we decide if we are buying or selling today. We could likely see some choppy market conditions around the current market structure, which we will be talking about in a moment. Then secondly, recently the US dollar has been doing retracement. If you have been monitoring the DXY, we saw a recent retreat in the US dollar, and this has boosted demand for the crude oil. Remember, when the dollar drops in value, the US crude oil becomes cheaper for other currency to buy. So they will convert into the US dollar is way more cheaper when the US dollar is lower, hence demand for crude oil could rise. Now, from all of these factors here, it shows that the potential to the upside is still very intact. However, during the course of the week, we talked about the larger than expected buildup in U.S. crude oil inventory, which reported about 5.47 million barrels for the previous week. And this is way too high, showing that the supply in the US market is still abundant. And our simple economics tells us that if supply is higher than demand, what happens? Price tends to drop because of the surplus of this commodity in the market. So in as much as the potential for an uptrend is still there, we cannot ignore the possibility that sellers could come in as a result of this larger than expected buildup in US crude oil inventory. Now, if we take all of this into account, we want to see how the market has digested this information. And of course, we can see this through the lens of price action. How has price been behaving since the beginning of the week? Now, if you remember vividly, at the beginning of the week, we had a range bound structure where price action was confined within the $69.70 level and the $69 area to emphasize the uncertainty at the beginning of the week. And of course, this area became a platform for buying opportunity. Now, if you look at what has been going on since the beginning of the week, you will see that this area had continued to serve as a buying niche. So anytime price drops into the structure, we see buyers come in, take over the market and push price further to the upside. And recently, yesterday during the later part of the New York session, we saw this significant bearish move into the structure. And as soon as price got there, what happened? We saw buy pressure resume from there again. So you can see how this area is considered to be a robust demand zone. And another technical observation I would like to share with you here is the fact that price action broke out of this trend line. Remember, we talked about this on Monday. Price broke out of this trend line. See what happened. We saw the breakout here. Let me give a visual representation of what I'm talking about here. So we saw price break out of this trend line on Tuesday, came back to retest on Wednesday, respected it, went up again, and on Thursday price came back again. And look at what is happening here. So will this turn out to be a platform that will incite another wave of bullish momentum today, or are we going to see price break down the trend line and that ascending trend line to incite a sell-off today? So in order to guide this trading decisions for today, I have a new level to maximize the potential uptrend move. So we have three factors supporting the uptrend scenario here. From a technical standpoint, we have the price trading above our key level, price trading above the ascending trend line, and of course price is trading above the descending trend line I just showed you earlier. So I marked out the $70.25 level as an area where I will be placing my buy stop order, and it appears price action had triggered that buy stop order there. So let's see how far this is going to go. Stop losses is going to be way below the $69.70 level. That's about 57 to 60 pips of stop loss on this one, giving enough breathing space for price action to move around. So if price continues to the upside, that's well and good. Another breakout of this trend line here will further confirm the strength of the buyers, making me feel more comfortable in the buy position. And in fact, if I can see something like a breakout retest of this trend line, I will be willing to add more buy positions. And of course, I have multiple levels here to maximize the uptrend move. So I have the $71.30 level. I also have the $72 area where a breakout retest of the structure will be welcoming more buying opportunities for us. So I still maintain a bullish bias on the US oil spot based on the fundamental factors we talked about earlier. However, if the market considers the increase in US supply based on the EIA report from Wednesday's session, we may likely see sellers take over this market, breaking down that ascending trend line to incite a sell-off. Now, for me to join a sell, I would like to see this ascending trend line broken to the downside, and in fact it is around that $69.70 level. Now, it is not appropriate that we jump into a sell right away, as a breakdown of the structure could still turn out to be a false breakdown. Remember, this is a robust demand zone, an area where buyers feel comfortable taking price from that area. So for me to join a sell, I would rather want to see confirmations like breakdown, retest of structure on my lower time frame. I want to see signs that buyers are finding it difficult to maintain momentum above the $69.70 level and the ascending trend line, and this will reflect on the chart as continued selling pressure evolving into a move to the downside. And if a breakdown of the key level at the $69 area happens, we do want to be adding more sell positions to that trade. I doubt if this will happen today, but that doesn't mean that if it happens, we are not going to be on standby to capitalize on that move. So this is my simple view on the US oil spot today. It's a very simple trading setup. So we have a scenario where we're looking out for buying opportunities above the $70.25 level. And of course, if the market continues to find higher highs, we have structures to maximize this uptrend move. So this is my simple move here. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. And you can use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, all right. So, in the absence of no questions, we'll take this as a confirmation that we are all on the same page. I hope you've marked out these levels accordingly. So, let's see how far this momentum is going to go at this point. And remember, we want to be giving enough breathing space for price action to move around. So what I mean by that is our stop loss on this one, I mentioned earlier, is going to be between how many pips did I say? Okay, between 55 to 60 pips, that is on this particular position, giving enough room for price action to move around. So with that said here, let's dive right into the second asset on our watch list. So the next asset we are looking at today is the USDJPY, that is the US dollar against the Japanese yen. And what a week we have here on this particular asset. Remember, we just introduced this asset into our watch list for this week, and we ride on that bullish momentum, hitting TP target twice during the first half of the week, scooping in over 600 pips during the first half of the week. And of course, we had the privilege of jumping into some short-term trading opportunities on Wednesday and Thursday. So for educational sake, let's quickly run through what really happened at the beginning of the week and what led to the decisions we made. So right here at the beginning of the week, we had a range bound structure. Remember, though the week started on a strong bearish note as we saw price find supply around the 149.600 area, and it dropped into the 149.100 area, whereby pressure resumed, bringing price back into where it started the week. And with the descending trend line marked out earlier, we identified this area as a temporary supply demand zone. That is, if we see reversal set up here, maybe like a double top structure, head and shoulder pattern, we will be willing to join the downtrend move. And in fact, if price break out of that supply demand zone, we will be hoping to join an uptrend move. And as a result of this, we had our first buy position for the week triggered at the breakout of the resistant line of that range bound structure, which was pegged at the 149.650. And since that moment, we have been buying the USDJPY, adding more position at the break of the key level at the 150.00 area. And of course, we saw this move hit TP target right here during the Asian session on Monday with about 135 pips. And we had two buy positions. The second one was about 100 pips. And then on Tuesday, we saw market go through a consolidation phase. And for those of you who are following me on both my my TradingView and Telegram platform, we were able to identify a range bound structure within this 151.075 and the 150.75 area right there on our 15 minutes time frame. And I illustrated on that technical structure that we will be triggering our first buy position at the 150.835. This was on Tuesday morning, and then add more at the breakout of that resistant line. As you will see, this one also hit TP target. I had my TP at the 152.500. And on Wednesday, during our live session, we were able to identify a simple trading setup on the 15 minutes time frame. Remember, this was what we were looking at on Wednesday during our live session. We had this range bound structure between the 152.550 and the 152.325 right here on the 15 minutes time frame. And of course, we were looking at price breaking out of that structure. And for those of us who missed out on this one, we saw the price come back to retest structure, triggering the buy position again, but it didn't last long before we were taken out of that position. And in my commentary yesterday morning, I updated us that the current bearish momentum that started during the Asian session may likely be the beginning of the retracement move of that bullish momentum that started this week. And of course, with this, we had a new structure here, selling below the 152. I did sell below that area and price moved about 50 pips. But at the end of the day, I was taken out with such small size of profit on that one. I hope you moved your stop losses as price moved significantly in our favor. For those of us who are part of the profitable journey for this week, well done and kudos to you. And well done on being faithful with our analytical approach. So as we head into the final trading day of the week, and in fact there are no significant positive driver for the Japanese yen at this point, though we had this Japanese verbal intervention where we saw recent comments from Japan's economic minister and vice minister, who of course acknowledged the excessive volatility in the yen, and they also mentioned that Japan's government may step in to stabilize the currency if need be, which could limit the further downside of the Japanese yen. But I don't think the market is wary of this verbal intervention at all, because during the Asian session we saw some deep buying activity around the USDJPY, showing signs that the USDJPY could still find some bullish momentum today. And if we look at the fundamental factors here, look at the October data from the Japanese economic docket shows that manufacturing and service sector contracted, which reflects a weak economic momentum and puts downward pressure on the yen. Then another thing is the falling inflation. We saw the Tokyo's core inflation dipped below the Bank of Japan's 2% target. Remember, we talked about this earlier. Where is it? Okay, this is it right here. Yesterday evening, we saw the data come in 1.8% below the target of 2%. And for me, this is not a good signal for the yen at all. And there could be, and this also reduces the likelihood of any further interest rate hike. Remember that the Bank of Japan increased interest rate in July this year. That was the first time they will be doing such in a very, very long time. For those of us who have been monitoring the yen, we know the Japanese economy is an advocate of ultra loose monetary policy, despite major central banks across the globe hiking interest rate. They maintain their interest rate at a deficit of 0.1%, and this has existed for a very long time. And for in July, they surprised us with a 0.25% hike, and there was still this signs that they could increase this interest rates anytime soon. But with the recent data here, I doubt if that will happen, and this could further influence some positivity around the US dollar. Then the uncertainty surrounding the upcoming general election on Sunday has also kept the yen subdued as investors await potential shift in Japanese economic policy direction before placing any aggressive bets. So this, for me, I still think will support the US dollar at this point. Even though the US dollar appears to be showing some retracement on the index at the moment, I still think that it could find some platform around the USDJPY to find new highs. Now, at this point in time, you will see that the last the last 18 hours or so, the market has been consolidating, confined within the 152.00 area and the 151.650 to emphasize the prevailing uncertainty at this point in time. And for me, I see this as major key players stepping aside as traders are going to be watching the US durable goods order and the consumer sentiment index data coming up later today for additional short-term market opportunities. So for me, I think that is the reason why we are having a consolidation phase at this point. And in fact, I've been able to use that consolidation phase to position myself strategically for the next move. Now look at what I am seeing here on the 1 hour time frame. Now this ascending trend line here is going to be playing a significant role as we go into today's trading session. So like I did mention, based on the fundamental drivers we talked about earlier, the path of least resistance still remain bullish. And from a technical standpoint, let's see if we can identify a structural pattern that can help us position ourselves for this uptrend continuation. Now, like I did say earlier, we have a structure here. This trend line is going to be playing a significant role for us today. Now, look at what happened on Tuesday's trading session. We saw how price broke out of the structure, and from a technical standpoint, we expect that price is likely going to come back, retest the structure in an attempt to continue the uptrend move. Now, if we zoom right into the trend line, look at what is happening here. I'm beginning to see something that looks like a reversal pattern after considering this retracement move, which appeared to have culminated at this point. As you will see, price action appeared to have evolved into a reversal setup. And when we identify the potential of a reversal setup like this, the next thing we want to be doing is to mark out the neckline, which interestingly lines up with that 152.00 level. Now for me, a breakout retest of this neckline will be all we need to continue the uptrend move. And look at how beautifully that reversal pattern is forming just right above that trend line. So I think we finally found a platform that will help us continue that uptrend move. So positioning ourselves above the 152 is looking very reasonable at this point in time. And then stop losses, please let's ensure we have enough breathing space. So I'll be placing my stop loss right within that temporary demand zone, which could dovetail between 40 to 50 pips of stop loss, and let's see how far this momentum will go. So like I did say here, buying the USDJPY is still looking promising. Above the 152.00 area is what we are looking at to continue the uptrend move. However, if the price drops maybe as a result of profit-taking activity, though the profit-taking activity here started on Wednesday, we've seen price drop significantly. Well, the only condition that will make me sell is for the ascending trend line to be breached and broken to the downside. Remember, I told you this trend line here is going to be playing a significant role. If it gets breached, then price would have taken out all the buy positions within that demand zone, and that area could turn out to be a new supply niche for the participants in this market. So let's see how the market will play out here. I strongly hold on to a bullish bias, but we never can tell what the sentiment index and the durable goods order report will be today, and that's could change the dynamic in the market, maybe in favor of the US dollar or against the US dollar. But we have a structure right now to help us navigate the structure. So that is my view here on the USDJPY for today. So please mark out those levels. Let me just zoom right in. This is where our focus is for today. So between the 152.00 and the 151.600 area is where we are looking at to trade today. A breakout on either side will give us a clue of where price will be going. If you have any questions whatsoever, feel free to let me know in the comment section. I will take the next 5-10 seconds off. Let's see if there are before we move into the final asset on our watch list for today. And do not forget to give the video a thumbs up. Your likes are very, very valuable to me. If you have found this content useful in making your independent decision, the cheapest way you can support this community to grow is by giving the video a thumbs up, and thank you very much as you do so. All right. So, in the absence of no questions, I want to take that as a confirmation that we are all on the same page. And for those of you who had clicked on the like button, thank you very much. I really do appreciate your support. So, with that said, let's move right into the final assets on our watch list for today. Stay tuned in. So the final asset we are looking at today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And this week we've done pretty well too on this one, though fairly well, let me say, as we at the beginning of the week we were buying this asset. Remember, we bought it in such a way that we were part of that move all the way into price action, eating that another record high around the 2,758, 759 ish area. And for those of us who are part of that profitable journey, well done and kudos to you. And okay, let's run through what happened at the beginning of the week. So we had this temporary demand zone identified here on the 1 hour time frame that was between the 2,723 and the 2,720 area, and of course that area became a platform for buying opportunities for us. And the same thing also happened a couple of days ago. I think I keep updating us with new trading setups on 15 minutes time frame for those of us who are following me on my TradingView and Telegram platform. So let me see. Okay, so this was one here. This was right here on Tuesday. So this guided our decision on Tuesday. This is the 15 minutes time frame. We marked out the structure, said we are only going to be selling if the 2,729 is broken and retested, which never happened. And of course, the 2,733 and the 2,736 guided our bullish opportunities, and we were able to continue that momentum to the upside. And yesterday, I think we also had another trading setup for yesterday's trading session. Okay, this is it right here. We were able to spot a demand zone. This was Thursday, I guess. This was Wednesday's trading session. So we were able to spot a demand zone between the 2,733 and the 2,740. And I did updated us with this setup during the New York session. I think about a couple of hours into the New York session, I saw some volatility happen at the beginning of the New York session, just right along this demand zone and that ascending trend line we marked here. So I was saying in that commentary that I will be looking out for buying opportunities at the break of the 2,740, though I had a position triggered actually, but it didn't do well as I got stopped out in a loss on that one. But finally, we were able to recoup that loss and of course made some much profit on top of it as price broke down that trend line, that key level at the 2,736, and we rode that momentum all the way to the downside, scooping over 250 pips before this bullish traction resumed. So it was quite a roller coaster of buys and sells for us on the XAUUSD through the course of the week. And yesterday we had another trading setup as we saw price come back into the 2037 area. In fact, we had a lot of choppy. I had a couple of losses here to be factual with you. In fact, we had buy, sell a couple of times before price climbed up and then dropped to the downside. So I missed out on this one right here. So far this week we've done fairly well. Congratulations to everyone who was part of this journey. And as we head into the final trading day of the week, there's been a little bit of choppy market conditions, especially during the early hours of today. And in fact, I can remember giving us an update this morning. I think about 7 a.m. this morning while I was looking at the chart, I saw a range bound structure. And I said we are going to be buying the breakout of this resistance line or selling the breakdown of the support line. Now look at what happened here. This is the range bound I shared with you this morning. Price was consolidating between the 2,728.50 and the 2,724.50. That's about a $4 range bound structure, and look at what happened. Price initially broke out of that structure, moved about 40 pips in our favor before we got taken out from that position. And depending on where you had moved your stop losses to, the worst case scenario would have been at break even. Then we saw price drop and break down the support line at the 2,724. I actually missed out on this one, but if you are taking it, well done to you, as you will currently be running with over 60 pips in profit. So for those of us who took that sell position and you still have your position active at this point, I suggest that you want to be moving your stop losses right now. Secure this current sell position, as anything could happen at this point. As you will see, the last 1 hour seen buy pressure resume around the 2017 as sellers are finding it difficult to break through that particular area. So moving your stop losses anywhere around the 2721 seems most appropriate, while we exercise patience and wait to see how the price is going to react to the 2017 area. So please move your stop losses if you still have your sell position active. So what are the drivers for today? What are the things that are driving the market? Well, I still strongly believe that the path of least resistance is to the upside, but when will that uptrend scenario happen? We don't know. But if we look at the fundamental factors, the US political uncertainty, that is the November 5 presidential election, which is approaching, there has been some uncertainty around potential political shifts and economic policies, which is expected to create demand for safe haven assets such as gold. Then another factor we can also bank on to buy the gold commodity today is the geopolitical tensions. Of course, the ongoing conflict between Israel and Hezbollah and the likes. These are factors that we can look at to support the price of gold. Then the recent decline in the US Treasury bond yield is another factor that could potentially support gold today. We saw the Treasury bond yield drop significantly between yesterday evening and this morning, and boosting the attractiveness for gold commodity. However, in as much as we have factors supporting an uptrend scenario in gold, a general risk on sentiment in the equity market is drawing investors away from safe haven asset like gold, putting some selling pressure on this price. Now, the resilient US dollar is another factor here, though the dollar is doing a little bit of retracement in the last 18 hours or so. We never can tell. Maybe this is just a retracement of the rally, and probably the rally could continue today. So market will be looking forward to the durable goods order and the Michigan Consumer Sentiment Index today for clues on the US economic strength and any potential short-term impact on gold prices. So as a result of this, how are we going to navigate this dynamic today? Are there any chances for buyers to come in today, or maybe is it going to be next week that buyers may likely come in? Well, I think I have a structure. Let's look at this. I think I do have a structure here on the 1 hour time frame. I guess I can remember what I was looking at this morning. Let me see, give me a moment. I think I had a structure. Okay, I think I had something here. Okay, hold on a second, let's see. Okay, so I think I have something here which I can used to illustrate what my thought process is. Now, if we look at what has been going on here in the last couple of days, the momentum has been to the downside, reflecting profit-taking activity in this market. And of course, if we connect the series of lower highs, we have a beautiful descending trend line to work with. Then another thing I would like to call our attention to is, despite the fact that we have lower highs in this market, we cannot ignore this demand zone here between the 2708 and hold on a second, let me label this. So we have, is it 2708 or 2709? I think 2709 and 2714. 2007-09 and 2007-15, I guess. So we have a temporary demand zone here. So we can see that so far this week price is yet to break through that particular area. Even the attempt to break through On Wednesday failed, as you will see. Buy pressure resumed from that area. The same thing happened here during the later part of Wednesday, and right now price appears to be gradually coming close to that area. So for me, I still have a strong feeling that buyers still have a say in this market. Even it could still drop back into this area before another wave of bullish momentum could happen. So we have a demand zone to work with today. Now the second one is this trend line here. Hold on a second, let me thicken it to emphasize its importance at this point. So if we capture the series of higher lows here, look at, we have a trend line to work with, and in the last 45 minutes you can see price action has been oscillating right around that trend line. Now the question as we head into today's trading session is whether we are going to be seeing a reversal setup along this trend line. So if we can identify a double bottom structure here, the breakout of the neckline will be all we need to continue that uptrend move. So we need to be very careful, exercise patience, and look out for a beautiful reversal setup around this particular area. Let me scale down into the 5 minutes and see if we can see anything to work with there. So I think we're beginning to notice some reversal setup going on here as sellers are finding it difficult to break through this trend line. Look at the first attempt, it failed. The second attempt, third, fourth attempt also failed, as you will see here. So with the reversal setup in place here, we have a neckline at the $2,720.50 level. So let's mark that area out. So we have a $2,720.50 area. This is right on the 5 minutes time frame, and for those of you who are going to be part of the go challenge, this is definitely going to be the structure I will be using to scalp this market today. So the $2,720.50 level, I think with this we have a good risk reward ratio, as the stop loss here will be right below the previous low, which is about 35 pips of stop loss on this one. So let's see how far this is going to go. Will price continue the uptrend from there, or how are we going to see price break down the support line here at the 2,718? So let me place that one right here. So we have 2,718, and mind you, I will not be selling unless I see price action break down and retest that structure. So we have a 2,718 exactly along that ascending trend line we spotted on the 15 minutes time frame. So a breakdown retest of structure will be good for me to sell this particular asset. So let's see how the market will play out. We have a simple setup on the 5 minutes time frame between the 2,720 and the 2,718. That's about a $2 range bound structure. Depending on the direction of this breakout will determine where we are going to be heading to today. So this is my simple view on the XAUUSD, and in fact this is what I will be using to scalp the gold during the go challenge today. So that is my simple view on the XAUUSD. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 10-15 seconds off, and while we wait, you can use that time to mark out those levels accordingly on your chart. Let me go back to the 15 minutes time frame so that we can see things from a broader view and mark it out accordingly on our chart. So this is it here. Mark out the levels accordingly, and don't forget to give the video a thumbs up. For those of you who had clicked on the like button, thank you very much. I really appreciate your support. All right. So, in the absence of no questions, I want to assume that we have come to the end of today's Forex Money Mastery. It has been a great moment with you guys. A splendid week we had here. From the USOILSPOT to the USDJPY and finally the XAUUSD, we were able to do pretty well for this week, and congratulations to everyone who has been part of this profitable journey. So today we were able to take on all of these assets, identifying simple structural details to navigate the current market dynamics today, after taking into account the fundamental factors and technical perspective into these market dynamics. And I do hope you all marked out these levels and structures accordingly on your chart. If you have done that, well done to you. So all we need to do right now is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place. For those of you who joined us for the first time, you're highly welcome on board. Very excited to have you join us. And I look forward to seeing you all same time on Monday morning, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to start the week on a fresh new note. And if you are yet to subscribe to the channel, please do right away. I will be dropping some trading setups, some analysis in preparation for next week right here on my YouTube platform. So you don't want to miss out on these ideas. Click on that subscribe button so that you do not miss out on them. So it's on this note I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone, and a happy weekend too. Bye.